Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we are looking at ticker symbol LASE, LASE. This is Laser Photonics Corporation. You can see a nice big green candle by my head. This company looks fairly brand new, so I'm sure we have some fun press releases that have caused this to shoot up. We're going to see what institutions and hedge funds are doing and see if we can map out any potential areas for this stock to come back to reality, or if this is going to go even higher. So, without further ado, let's go ahead and dive on in. I'm back. Okay. So yeah, this went from 70 cents to 10 bucks. Pretty cool. I mean, it's with the Bulls on a monthly basis. We look at the bigger picture. Uh, everything is with the Bulls at the moment. The stock did get to 11.19, 11.20. Okay, so looking at the stock, sales for 2023 was 3.9 million. Sales for 2024, 3.1 million. So we're actually doing worse than we were than 2023. However, there are still potentially two or three earnings releases left for this year. Looks like the last call was April 15th. So, are they in the US? They are. So, looks like they are on track to do less than they did in 2023. Earnings per share are just flat at negative 0.37. They lose 11.1 million. They make 3.1 million. So this is obviously a recipe for disaster. If you are losing more than you are making, I feel confident about the quick ratio. I mean, let's just plug in the numbers on this because I think it could make sense. So we only include the market cap if it's over 1 billion. They have an income of negative 11 million, 190,000. Sales of 3,100,000. All right. Um, let's see what we got. I mean, they have a high quick ratio, so that's probably what's going to save them here. Let's go down, down, down. Yeah, they're just squeaking by. They are just squeaking by. Huge negative net income here. This definitely looks like a one-time thing. So this will be something to watch for Q3 2024. This should get better. Gross margins were at 60% at one point, then 25, 27, now 11%. Very interesting. Back to our calculation. They do 2,750,000 in cash is what they have. Yep. Then total debt. They have 180,000 in debt. So it actually looks like this is negative 180,000. So this falls out of our share calculation. Total assets 11 million, total liabilities 800,000. So assets dwarf liabilities 10 to 1. That is crazy. Over 10 to 1, probably like 13 to 1. So that is wild. Laser company in Florida. Just crazy. Typically, I like to look at stocks that have been around for a while just because they do have patterns, but let's see what institutions are doing. Institutions own 1.15%. That is old data. New data shows institutions actually sold 0.09%. You can see a nice little decrease here. Morgan Stanley bought 20 shares. Very cool. Vanguard owns 32,000 shares as of a month-ish ago. So Vanguard's up pretty good. Yeah, they bought in, well, They bought it around $3 and they only bought 32,000. So, I mean, institutions sold off a little bit. However, I mean, this is with the bulls. I mean, it's easily manipulatable because there's only 4.9 million shares in the float. So that means if this shares cost $11, let's say, and there's 4 million, if you have $44 million and you drop that on the stock, it's gonna make it go bananas. So extreme caution with this one, pretty please. In terms of supports and resistances, honestly, we got, let's extend this to the right. Let's look at all-time supports. Uh, I definitely think this comes back down to $5 for shizzle. Uh, let's see. Man. Yeah, the stock just has not been around long enough for me to do some bigger, longer term calculations. So I think there's a good chance the stock gets back down to $5. At $5, I think it's still overpriced because again, they're losing 11 million. They're making 3 million. Again, that negative 8 million charge off for Q2 2024, that definitely looked like a one-off charge. So that is not typical, but it will be reflected until Q2 2025. So I think this has a few quarters, well, at least 2 quarters to have the stock come back down, consolidate at a reasonable stock price, five-ish maybe, um, and see if the company can improve. Because if they can come from 3 million and move it to 4, 5, 6 million, that'd be huge. That'd be like doubling their revenues for a year or over 2 years. So not much to say with this one other than caution. And again, we're gonna be watching $5.49 as our um, potential come down price. So if you made it this far, thank you for watching a shorter video than normal, but I do appreciate your time. Take care.